Joey? Joey?
What?
I'm assuming that I'm on. It would be nice if you would let me know. All right, thank you. Hey, everybody, welcome to Afternoon Market Action. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Glad to be here. And it looks like the Fed is already put something up, and unfortunately, I don't already have that. And so we'll go from there since that should have been up, but it wasn't. cnbc.com, and then we'll also put it back on to the meeting once he comes on. Fed does raise a quarter basis points expected, and he looks like it's still going to be ongoing increases. And come 2:30, we will put him on live so we can react to what he's got to say. And wow, I didn't even say this. If you can hear me, by all means, please respond in the affirmative to let me know that I am coming across loud and clear. Hopefully I am. But this is Western Wednesday, and I got my Western gear on, got my bolo, got my hat, got my cowboy boots, and I got my jeans on today as well. So part of Western Wednesday, trying to make the hashtag Western Wednesday VV go viral. All right, hashtag Western Wednesday VV.com, but trying to see if we can get that hashtag to go live and go out there. So Mark says, Boston, I think his hat is too tight. Actually, this hat's big. This is a big hat. Got it from a former employee here, Brian Barnes. I don't know if he ever watches our live YouTubes or our YouTubes, but he gave this hat to me. It's a Stetson. Deep down, it's a Stetson. All right, so that's a bona fide cowboy hat for sure. That's a bona fide cowboy for sure. Cowboy hat. Hello, Glenn. I'm not cooking bacon. I am cooking a big pork roast because it's freezing up here in Boston. Yeah, it got to be bacon. You can do all the pork you want, but it's got to be bacon. Go eat some barbecue. All right, so let's see. Wow, we got over my 300 people today already. Well, this is a big day. We got 324 people. Let's see. Let's see if we can get up to 400 people today. I need you guys to share the link. Share the link. Let's see if we can get 400 people in here. I want to respond to what the Fed does. So let's look at it this way. Before we get into any news, let's go see what happens in the market. Here's our 3-month view of the market. I've been letting you know that as the market is rising, let's go put that on. As the market is rising, our MTI indicators have been letting us know that the market is toppy. So as we start to pull back a little bit, that shouldn't be a surprise. The market is currently overbought, and we have an indicator that talks about that. So little wick at the top of the candle, but let's go look at intraday. What's going on? Boom. There it is, right at 2 o'clock. News. Now, I think that the market is going down because it's still an interest rate hike. All right, we're still raising interest rates. Thank you very much. Mish says, looking good, nice hat. I appreciate that. And so there's no getting around that. I think the Fed is going to still continue to raise interest rates to go after inflation. Now, inflation, of course, is getting better. It's already peaked. It's going down. But is it going down fast enough for the Fed to stop raising interest rates? Quarter basis points, better than 50 basis points, better than 75 basis points. So you would think that the market would be in tune and go, hey, that's better. But overall, we know that the Fed is still going to continue to raise interest rates, and that is what it is. First time today, what about Boyle? Boyle is not the play, Tim. Man, it looks like KOLD is the play. KOLD is the play because oil, not oil, you said Boyle. But natural gas is just getting killed. Natural gas is just getting killed, and cold. Let's go take a look at that real quick. Cold is the play. That's the inverse. That's the inverse of Boyle. And let's go take a look at that. KOLD. KOLD. That's been the play. Put this on a 1-month graph. That's been the play. So Boyle is not the play right now. And right now, natural gas is getting killed. Cold is the play. KOLD. Over the last month, the 3 and the 8 have been bullish the whole 3 months. bullish all 3 months. So will natural gas soon be free? I doubt that. Glenn, Dow transports are kicking butt. This has to be a bullish sign, right? So talking about transport, you know what else is moving? Shipping. Shipping is moving. I think I'm going to do Friday's video about some good low dollar speculative plays. And I've got a shipping company that's in there that's rocking and rolling, Paul. So make sure you stay tuned for Friday's video. I do have a shipping play to look at. So how many of you, now let's go back to this real quick. We got time before the Fed comes on. How many of you have been watching the lists that I've been setting up for you on the YouTube channel? Type a 1. And especially I asked that question because we've got the list for the beginning of the year that's still up over 50%. Still up over 50%. And the reason why I ask that question is because all of the videos that I've been putting out about stocks for you to pay attention to, right now, all of them are doing well. So I don't want to hear later that, well, you're showing this now. What about, I'm going to get that. But the information that we put on our YouTube channel is there for you to take advantage of when it's the time to take advantage of. Now, David says, no, where is it? If you are a subscriber to the channel, David, all right, and you hit the bell icon, you should get an alert on when live streams like this go out, or when the videos that we put out 3 times a week go out. You should be getting those alerts, all right? But talking about Boyle, this is more of the play right now, and it's rocking and rolling. It's rocking and rolling. Right now, natural gas is going to the downside, and coal plays the downside. Stoyan says, up 48%. Thanks, Glenn. All you, brother. Listen, it's all about the system. Drew is asking a question. See, look at that. Is there a folder? Asking for a friend. I don't know if you're asking about if there's a folder in your system like Mark Norton would ask, or is there a folder on our YouTube channel? And on our YouTube channel, if you go there, you'll see the most recent videos on our YouTube channel to be able to tap into. Real quick, let's go back to the viewers tab. The most recent video that I put out. All right, where was it? Go to YouTube videos. And this was just done 2 days ago. 1:30, industry movers. So someone asked me to do another list of stocks like I did for the 2023 stocks. All right, and my answer to them was, it all depends on what the market's going to do. That's the most important thing. I don't know if the market's going to still keep going up or going down. Is it too late to get in coal, David? I don't think so. I'm looking at that graph. That graph still lets me know that it's okay to get in coal, but I would still pay attention to it. And actually, coal doesn't actually just move in tandem with the market. All right, that's a stock or a commodity that doesn't have to move in conjunction with the market. So coal, you might still be able to do that. All right, so thank you, Badger. So I did this 2 days ago, and it was called Industry Mover. So I did another listing of stocks for longer term to take a look at. I walked you through the process in the video that showed you how I got the stock. So in this video, I used the VectorVest system to find the stocks for specific criteria. Let's go back to 1:30 when I did the video, which was 2 days ago, right? 1:30, 2023. Let's quick test all of them. Let's see what they look like. Wow, look at that. When I posted this on social media, it was up almost 3%. Folks, that's not bad for 2 days. And every one of these stocks were used and found looking for explosive industries and specific criteria to find the stocks. One stock is down. It's an oil stock. But the rest of them are all up. I've got 9 winners and 1 loser. The reason why I bring this up is because I look at the videos that we put out. I look at the views that we get on the videos that we put out, and they should be viewed a lot more than what they are. You guys This is a YouTube universe, and everybody in YouTube is looking for the best stocks to be able to get into without me trying to hype a stock or pump a stock. There's reasons behind why I pick the stocks that I do. Let's go back to, and I know I just did the video on this. If we go back to the one we just did on 120, on the beginning of the year, 1/3 of 2023, I'm really pushing this point home because you guys need to be watching the stuff that we put out there. Here was the stocks that I set up for 2023. I do a quick test since that date. Look at that, folks, up 61. And if anybody is not making money in the market or looking for stock ideas, this is what you're looking at right here. This is what you're looking at right here, utilizing the VectorVest system. I walked through why I picked these stocks for the year 2023 in the video. Joey can post any one of those videos if he chooses to, so that you can go back and look, or you can just stay within our channel. Stay within the channel. Those videos are all there, and I'm trying to get you guys in early on a lot of these things so that you don't miss the moves. Now, there's a disclaimer, all right? We've been good so far. The market's still going up. The primary wave is still up. It's aiding these stocks. But as we look at the graph of the VectorVest composite, all right, look at that. We're rebounding. We're rebounding for the news of the 25 basis points. Let's go back to the intraday. Look at that move back up. Is this enough to keep the market moving higher? Steven says, how are you picking these stocks for each day you do this YouTube video? Steven, if you watch the video walks you through how I found these stocks and the research behind the stocks. It's all in the video. That's why I'm pushing you to go watch the video so that you get a better understanding that I just didn't willy-nilly pick the stocks. All right, so that's what it's all about. Look at the market timing chart. Steven mentioned this morning not to play the first move after the announcement. Absolutely. So the first move after the market got the news, and look at that rebound. Now, is it going to be enough to take out the session high for the day, which is sitting at about 58.53 on the VectorVest composite? We got about 20 more cents to go, and the market's responding. So I got you, Mark, and Steve is absolutely right. Rodney, go look at in the dates for the videos. The dates for the videos are right here. That was the video done on 1/3. The industry movers was done a couple of days ago on 1/30. I did a video on AI stocks, which was done on 1/24. Let's go take a look at that. All right, that was on AI stocks spurred up by ChatGPT. That was on 1/24. Let's quick test. What are they doing? Wow. Folks, you're missing out if you're not watching the videos. You're missing out if you're not watching the videos. Almost 9% in about a week. 9%. Who's doing that? Who's out there doing that? And again, I'm not pumping any stock. I got no agenda with any of these stocks, but I won't lie. The market's been conducive to the moves of these stocks. So if you're looking for ideas, and you'll never hear me, thanks to Mark Norton, you'll never hear me tell you to buy any of these stocks. The decision is always going to be your decision. All I do is present the case for you at least to keep these stocks on your radar. That's all I got to say. Drew said, bought cold using the MPI currently. Wow, $21 now, 62. Notice that on Mondays, I talk about the MPI, and I've got a watch list of stocks that I use the MPI on. Man, there's a lot of stuff out there. And again, as I look at the views out there, they warrant more views than what they're getting. And I'm trying to invite you to get in early on these stocks as I present them on the YouTube channel. All right, so that was the purpose behind asking that question. Now, again, it's going to be about 16 minutes before the Fed chief comes on and does his meeting, his Q&A. We'll take a look at that. Look at that. QBTS makes quantum computers used for AI. I don't know if I have that in here. And I'm seriously thinking, and I'm not going to put that in there yet. I'm going to keep my eye on it, though. QBTS. I'm thinking about making an AI watch list within the VectorVest software. I think that whole chat GPT is going to be a big mover, and that's why Microsoft bought into it. That could be a really, really big stock that moves. C3AI is another good company, and so on and so forth down the line. There's reasons why I like these stocks in the AI space, and that's why it's good to look at the video. Can I do a Canadian version? I don't know if there's any AI stocks in Canada. All right, so we'll take a look. Energy says, Glenn, can you make a video for 2023 EVs and component companies? You know, I'm thinking about doing another EV space, EV video. I'm just not sure how I want to present it yet. Energy, I'm just not sure how I want to present it yet, but I'm seriously thinking about it. And Drew is right. This stuff really works. How many of you, type of 1 in the room, how many of you are not subscribers to the VectorVest system? Type of 1. How many of you are not subscribers to the VectorVest system? Type of 1. All right. And again, if you're not looking at the videos that we've put out, I think that it at least warrants a subscription, even if it's a short-term one. It warrants a subscription to the software to get the ideas. And again, we put a lot of work behind the videos. We put a lot of work. If you are not a subscriber to the VectorVest system, you can go to www.vectorvest.com/ what is the / Joey for the 99-cent trial? YT. There you go. www.vectorvest.com / YT. 99 cents for 30 days. Thank you, Mark. 99 cents for 30 days. And a lot of the things that I show in the video, you can duplicate on your own within the VectorVest software. All right. So for anyone who's not a subscriber, I'm not trying to sell it to you, but if I can show you these results on the videos that we do that you can duplicate for the most part, that may be worth your time to take a look at the VectorVest system. All right. So thank you, everybody. For everybody that's saying nice hat, thank you very much. Thank you very much. I appreciate that. I do appreciate that. All right. Again, it's another trend. I'm trying to get started. Western Wednesday. VV. Hashtag Western Wednesday VV. Did you hear about GM buying lithium? Yep. And that's going to be another one of the stories that I'm going to do in regards to a follow-up to the commodity stocks. Let's take a look at that real quick. There's my commodity stocks video that I did on 120. Let's go see what they're doing. All right. That was done on 120. 120. Let's go see what they look like. And I did see the story about there's a lithium land grab right now. That's the story. Let's quick test all of these. These are my commodity stocks. And it's up 2.53%. A couple of them. There it was. Boyle was, did I have Boyle in here? I didn't have Boyle in here. But there's my lithium stock, LAC, up 16.5%. There's my uranium stock. There's my aluminum stock. There's my iron ore stock. There's my oil stock. Mining, gold is in here as well. A mining stock and copper is in here as well. Up 2.53%, still outpacing the market, but not a lot. Any news on XROF? Yeah, I think a lot of people are waiting for some big news on XROF. XROF is rocking and rolling. For the position that I hold, I just realized I'm up over 103%. 103%. So it is what it is. I'm loving it. I'm loving it, loving it, loving it. And a lot of people who own XROF are loving it as well. All right. I see one cowboy, but where are them bulls? I ain't riding no bull. I ain't doing that. I'm not doing that yet. Found QBTS with jailbreak, cherry picked with the MPI. I'm not ready for bottom fishing yet. All right. Not yet while the market is still as overbought as it is. There's the third move. There's the first move coming at the news of the rate hike. Here's the second move. And now we're coming back down. I'm really looking to see if the rate hike is really going to change the face of the market of what's going on right now. Dr. Paul says, even a blind pig finds corn some days. Listen, I got nothing to do with that. But Donald, I went and answered your question. You talked a lot, and you do, all right? But I respect what you say. But you were talking about why would I have bought on that day? I answered your question. But you know something? Sometimes, Donald, it seems like people don't care that we do well. You want to find everything bad about what we do. And I don't care. All right. I'm going to stand up. All right. I'm going to stand up to what I say and what I do, my friend. And, you know, no matter whether you agree with me or not, I still respect everything that you got to say. And, oh, Donald says, no, I'm with you. Okay, that's fine. I just wanted to make sure that any ambiguity that was in that presentation was taken care of. I don't want that. I don't want that. All right. I just wanted to see the video found it. There you go. And there it is. So hopefully that was right in line with what you were looking for. Would you do a video on stock options? And the problem with that, I would have to use a tool that nobody pretty much has unless you're in Ron Wheeler's class. And I would leave the option stuff up to Ron. And Ron does a really good job with that. So that's where I would leave that. That's where I would leave that. All right. Hold on. Salim says, have you read the shareholders letter from Xro? Great info. And there was a guy, I think that was on Reddit, who wasn't part of Xro, gave a valuation of Xro that he did a really good job of it. So I think that's got a lot to do with it. And there is some jagosity on the market timing graph intraday. It is. Always learn something new each time I tune in, worth the time. That's right. And if you guys feel that it's worth the time to be here, don't forget to hit the like button. Hit the like button. And again, share this content. Still trying to get us up over 400 people. All right. And we got about 9 minutes before the Fed comes on. I did have some stuff I wanted to talk about. Let's go look at what the markets are doing. Man, let's stream this though. Let's stream this. Let's go see. And the markets have come out of the doldrums. They're trading off of their session lows. All right. Go the other way around. They are trying to trade off their session lows. The Qs are now up. The Russell is up. The Dow is still down. The spiders are still down. And the Vector, where's the VVC? It's not in here. Let's go put that in there. Missed that. Already did hit that button, fam. Thank you, Stoyan. I appreciate that. The VVC is down. Right now, the only thing that's up is the Q. So the market is responding the best way that they see how. And I'm thinking that tomorrow, after the information is digested, we'll see more of where the market wants to go. But I don't want you guys to forget that overall, looking at a 3-month graph of the VectorVest composite, that we're still at a level where the market is looking toppy. A little bit of an indecision or doji cross as of right now, but the 3 and the 8 are still positive on the market. Powell speaks at 2:30, and Donald, we're going to have that live for you in 8 minutes. All right. While that's getting ready to go on, let's go take a look at some news stories real quick. I guess we can get it from right here. Let's go see. I click on that. Looking for the video. The video will come on here. Okay, I'm going to click that. Good, it's going to come up. Good. So we'll be able to see the video right here. Joey will make sure that everybody can hear it. Interesting. Here's a story that I've got. Here's everything the Fed is expected to do today. Markets have priced in the percentage point, and it did. But the focus likely will be more on Chairman Jerome Powell, who could push back on the idea of a looser Fed later this year. He's on a very tight monetary policy tightrope where he can't allow the market to think that this is the end game, blah, 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 blah. Here's another story. How about this? Why the case is growing for a Federal Reserve interest rate cut before the end of the year. How many of you think that that's realistic? Type of 1. How many of you think that he will cut rates before the end of the year? Type of 2. All right. How many of you think that that is real, that he will, how many of you think of that? All right. Let's say it this way. How many of you don't think we're going to get a rate cut? Type of 1. How many of you think that we will get a rate cut? Type of 2. That's probably the easier way to say that. What was the rate announcement, Salim? It was a 1/4 basis points. It was 25 basis points. All right. A lot more 1s than 2s. Joey, if you want to put up a poll, it's up to you. How many people think that we will have a rate cut by the end of the year? Type of 1. How many of you think we will not have, it's the other way around. I screwed it up. How many of you think that we will not have a rate cut, type of 1? How many of you think we will have a rate cut, type of 2? Whew. All right, so it's getting ready to come on in about 6 minutes. This is a story, though. This is a story that says that it's a possibility that by the end of the year, we may have an interest rate cut, and that's normally done to stimulate the economy. But what happens with inflation? All right, and I like that, Stephen. You know, I don't like to talk politics in here, but he says if he does, it will be political. There's a few people that think that we will get a rate cut by the end of the year. Germany is buying up huge quantities of lithium and rare earths in South America. There was a story, I think it's going to be from my Friday video, I think. I did see the news of lithium land grabs, that people are trying to go after lithium. Why? Because EVs are getting hot. All right, or yes or no. We can go with yes or no. Do you think that you can do that? That's probably an easier way to go, but it's up to Joey if he's going to put up the poll or not. And if he does, then he does. If he doesn't, well, I see the response in the room. Most people think that we will not get a rate cut, and I'm on board with that. I don't think that we're going to get a rate cut either. So I'm waiting for that to come on. Oh, there it is. There it is. I got it. The land grab for lithium is just getting started with the GM deal, says EV materials expert. So, yeah, I did have the story. I thought it was going to be for Friday, but it's not. It's for today. I like SMCI, but there's a lot of other stocks that I like better than that, Brad. I like TSM. I like ASML. I even like OWN. All right. But SMCI is in that space. Those are 3 other stocks that I like a little bit better than SMCI. All right, that's just my 2 cents in regards to that. Why is the Unisearch MPI folder now empty? How do we access it? Lisa, do you know an answer to that? It shouldn't be empty. The MPI folder you're talking about in the Unisearch? Unisearch, let's go see. There should be an MPI Unisearch, near perfect indicator. It's not empty. I don't see it as empty. CL Butler. In the Unisearch tool, here's the MPIs. MPI search. There's one that I added. I added this. I might have added the enhance. I don't remember. But I know I added this one specifically for options. It shouldn't be empty. All right. Oh, did you turn off Pro Trader? Says Boston. There you go. That would make sense that you wouldn't have it for them. Right. There you go. A couple of people are saying the same thing. If you no longer have Pro Trader, you will not be able to search the MPI. Market was up 5% in January after a down year in 2022. The 5 other times we had positive month in January, the year ended 30% higher at the end of the year. Good sign for 2023. But you know something? This is a different market, Salim. All right, there's definitely a different market with the high inflation and the rise of interest rates to combat inflation. I still think that we're in a different time. All right, I think we are totally in a different time. All right, we're about 2 minutes away. What else do I have as news for you today? Peloton, big move after earnings. And that's because they've got subscription revenue growth. People are getting back into Peloton. I see the commercials on TV that it's a virtual thing that you can get and get access to all of these trainers online and this, that, and the other thing. I think that's helping. All right. I'm not sure I still like the stock, though. OPEC, here's for oil. OPEC Plus committee recommends no change in oil output policy at the virtual meeting. I think that's going to hurt oil, but I'm still not seeing anything that says, thank you, Fireblazer. I'm still not seeing anything that says that we're buying back from the reserves yet. And the last thing in here breaks down AMD. Here's another stock in that space with SMCI for Q4 earnings. All right. So this is getting ready to happen. It's waiting for it to pop up. All right. We're going to stay here now. And when he comes up, we'll start to listen to what's going on. Everybody okay with that? Type of 1 if you're okay with that. Type of 2 if you don't want to hear them. Type of 1 if you're okay with that. Type of 2 if you don't want to hear them. All right, so just let me know. And if I get a lot of twos, we won't listen to him for real long. But I think it's important to hear what he's got to say, all right, and what his plans are going forward. I think it's important to do that. Rather hear Glenn, says Gary. I appreciate that. I do appreciate that. But I think what he's got to say is important. There's no ifs, ands, or buts about it. I think that what he's got is important. Fireblazer says, we only want to hear you, Master Glenn. I ain't no master nothing. I'm just a guy. All right, I'm just a guy. All right, so it seems like everybody wants to hear, for the most part, what's going on. I'm just waiting for this, waiting for him to go live. All right, waiting for him to go live, waiting for CNBC television. So it's waiting for the television to kick in, and when it does, it should just pop up. Hopefully that'll happen. And we'll get to see him. All right. There it is. All right, now that's up. I need to know what else I need to turn up, Joey. Sorry. All right. Well, we'll just work this out on our own. It's all right. We'll make it happen. All right. So when he comes up, whatever I need to do on my end, I will. May need. Turn it up here. I got it. Only 10 likes. Do we only have 10 likes? No, we got 110 likes. What are you missing something, to the moon? All right. All right, here he comes. Tell me if you can hear it.
Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing.
Type of one if you can hear him good.
To bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do.
That sounds like
Price
more
stability
pain.
is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments.
All right, so I got the market up as he's talking. Look at the market
The U.S.
fall.
economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher
market don't like
and
this.
slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories,
I'm not going to
PCE
say
prices
pull your
rose
money. Make sure you
4.4%.
guys have your stops in place.
Inflation data
And
received
Donald,
over
you're
the
right.
past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path.
All right, here's the rebound.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate.
Rebound.
And we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year.
All right, so he's up to
We
4.5.
anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
He wanted 5%. People think
We are
it's going
seeing
to
the
be
effects
6
of
or
our
7.
policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance.
Look at that
We will continue
rebound.
to make our decisions meeting by meeting, taking into account the totality of incoming data
Big
and their
pop.
implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against
Let me take me
prematurely
off so
losing
that you can
policy.
see the graph.
We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right. How many of you want to see the Q&A now? Type of 1. If
Chris
you don't
Bergever,
want to
the
see the Q&A,
Associated
type of
Press,
2.
Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January.
All right.
Does that make your job of combating inflation harder, and could you see lifting rates higher than you otherwise would to offset the increase in...
Got you,
to offset
Fitz.
the
I
easing
like
of financial
Fitz's
conditions?
answer.
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Rachel. Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed, demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story.
Tommy, we still have
The
low
issue is that we have a
unemployment,
large
my
sector
friend.
called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions. Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway, and we continue to get strong.
We
labor
broke through the
market
session highs.
but we'll update those forecasts in March.
Look at that. Nice rebound. We broke through the session highs. Bigly.
Chair Powell, Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we've seen average hourly earnings and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more, but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently. And I did see that it moved back up this morning.
Yes, Stephen, those
I do
videos
think
are still
that,
online.
It's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator.
I don't call this a
but
pump and
nonetheless,
dump.
You're right. We do see wages moving down.
I
If you
think
look
the
across
first
rest
couple
the
of
labor market,
moves,
you still see very high.
we went through a level
payroll
of
job creation. And,
support and
which
just
are
went
still at
back
an
up. Look
elevated
at that.
level. So by many indicators, the job market is still very strong.
Colby and then Howard.
And the job openings are still there, Donald.
Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting,
Look
is
at
the
that
trajectory
move.
for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So
Hay stock
you're right.
time.
At the
No,
December
it's not a
meeting, we all
dump
wrote
and
down
pump.
Our best estimates of what we
The
thought
jobs are
ultimate
still
level
in
would be,
the
and that's
service
obviously back in December,
sector,
and the median for
Con.
that was between 5 and 5.25%.
And then we have higher level jobs that a lot of people are not
At the March
qualified
meeting, we're
for
gonna
that are
update those
looking for
assessments.
people
We did
as
not
well.
update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now.
Look at that.
If we come to the view that we need to write down to move rates up beyond what we
It
said,
could go higher.
we'll certainly do that.
That's
At
not
the
what
same
the people
time,
want to
if we
hear.
come in the other direction, then we'll make data-dependent decisions at coming meetings, of course.
I'm not thinking about
Quick follow-up. How are
Carvana,
you viewing
Gary,
the
at
kind of
all.
balance of risk between those two
Fundament-
options
that-
of,
I-
you know,
I'm
the
not. That's not
likelihood of
my-
maybe
not-
falling
that's
short
my
of that
opinion.
or going beyond that level?
I guess I would say it this way.
He
I
said
continue to
nothing
think that
dovish, Salim, at all.
it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back
And
in.
that's
And
important
now
right there.
You really do worry about expectations getting unanchored. And that kind of
He's
thing.
willing to
This is a very
overshoot because he
difficult
doesn't
risk
want to
manage.
miss
Whereas
inflation going back up.
of course, we have no incentive and no desire to over tighten, but if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services X housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other two sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together, although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature, it would be very premature to declare victory or to think that we've really got this. We need to see, our goal, of course, is to bring inflation
Look
down.
at that move.
How do we get that done? There are many, many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard.
All right. So that's all I want to listen from the Fed. We took some questions. The market responded. The first right here was the big push down. Then we went to a nice push up, a bigger push down, and then look at the market take off. So the question is, with he's not hawkish, why is the market still going up? Because I think that people think that he thinks that inflation's getting better so he can raise it at a smaller rate. The problem is he's still raising interest rates. And I think that people are bypassing the idea that he's still raising interest rates and looking at the point that he's raising them less aggressively. That's what that's what I think. Fireblazer says, bet it comes down by closing. We'll see. Let's go put this back on a 3-month graph. Nice open day. What does it also tell me? That we are further in the level of being overbought. All right. And every time that MTI level gets hit, and the last time it got hit right back here, look at the pullback. Was very small. The 388 held. If this market is at a level of being overbought, I'm looking for a couple of things. I'm looking to see how far the market's going to fall. I've got a level of support sitting here at 57.44, but I'm really looking to see if the 3 goes below the 8 like it did here. See, we hit that level of 1.5 to 1.6. The 3 and the 8 confirmed the move. We got to the level of 1.5, 1.6, but the 3 and the 8 did not confirm the move. Does everybody see that? Type a yes or a no in the room. All right? Does everybody see that? Type a yes or a no in the room. So by the power of the VectorVest system, you can get better information so that you don't panic sell. You can get better information so that you don't. And again, right here was at the level of looking for a top, the 3 and the 8 confirmed it. At the level of looking for a top, the 3 and the 8 didn't confirm it. And if we are going to pull back, let's say tomorrow, let's see that on the end of the day, we are overbought. There's no ifs, ands, or buts about it. We are overbought. But let's see if we're going to get another pullback like we did here with no confirmation of the 3 and the 8, or will we get a pullback with confirmation of the 3 and the 8? All right. That's all I got to talk about today. I wanted to respond live to what the Fed was talking about. We did look at some news on some things that are going on, and we're looking at the market. All of these things together, all right, all of these things together is what we can do to give you better information. I never said that the 3 and the 8 was a VectorVest thing alone. Never once said that. And I'm looking at a couple of different, I like the 3 and the 8 as confirmation, whether it's on the market, whether it's on the stock, or whether it's on an industry. All right, so I like it as confirmation. I didn't say it was not a VectorVest thing alone. We use it, all right, and I will show it time and time again. Glenn, you have 83 alerts. They are trying to contact you for an extended warranty. That's why I've got 83 alerts, because I'm not going to look at. I don't want that warranty. Did you keep your eye on the MTI? Mark, I'm always keeping them. That's why I'm trying to tell you guys just to be careful. I like that we have an update today, but I'm telling you that the market is at a point where we are overbought. So just be careful. How does the market move for days after the initial reaction? It all depends on what the market feels. Do they feel bullish? Do they feel bearish? All right, that's what it comes down to. That's what it comes down to. Thank you, Glenn and Joey, and your support, gal. You're welcome. All right, so again, I invite you guys to, one, subscribe to the channel so you get insight on the stories that so far this year, we've been good. All right, these are stocks that have been going up. Watch the videos. If you are watching the videos, share the content. Share the content out on your media outlets as well, so we get more people to watch what we're doing here. And our thing is, we have you in mind, and we want to help you guys make better decisions, because we do the work, you reap the rewards. That's what it really comes down to. All right, we really do a lot of work for you. Is there a video about how the 3 and the 8 works? Salim, I don't really need to do a video about it. It's 2 moving averages that we like to use here at VectorVest, and there's not a lot to have to talk about with it. It's 2 moving averages. Whether it's the 3 and the 8, the 5 and 10, 20 and 50, 10, and whatever moving averages you want, you're looking for crossovers to buy in on a stock. If you're not already in, should we go all in now? I'm not going to tell you to do that, especially knowing that the market is overbought. I'm going to tell you, if you're going to take advantage of the market, I wouldn't back up the truck. I wouldn't back up the truck. All right, not now. I wouldn't back up the truck, but if the market is giving you an opportunity to make some money short term, I would take it, but I'm not going to tell you to back up the truck. Time to get into DRV. I'm still not ready to get into DRV. If I take a look at DRV, Ravi, I'm still not super convinced on it. It's still moving. That's intraday. I'm not going to even show the graph. It's moving down. There's nothing that's telling me, give me any opportunity to get in. Ravi, I'm looking for the 3 to go above the 8. That's what I'm looking for. I'm looking for the 3 to go above the 8. As soon as the 3 can go above the 8, I'd be interesting. I'd be interested in thinking about it. But there's nothing about it telling me it's time to buy it. All right, with that, folks, with my little bolo, I took my hat off. A couple of people said I look better without the hat on. But when I sign off, I'm putting the hat back on. All right, as I sign off, I'm putting the hat back on. Remember, hashtag Western Wednesday VV. Let's make it go viral. Put my picture that I got up there. I'm not going to sing. Listen, it's got to hit me to sing. I don't want to sing today. I just don't want to sing. If I sing, I'm going to sing something like a rhinestone cowboy. All right, I sang. All right, so I sang. That's about it now. With that, thank you guys for supporting the channel. Man, we got 137 likes today. Way to go. We got over 300 people here today. Let's see what we can do to make that happen every week. With that, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Salam, shalom, namaste, yasu. Until the next time, folks, see ya.